All right, everybody. This is episode 41 of the Beef and Bitcoin podcast with your host, CH. Looks like the Bitcoin ETF was recently withdrawn. Today I just wanted to do a really quick episode to talk about the Bitcoin ETF being withdrawn and does it even matter? So as you can see on the screen here, we have a recent article from Bitcoin Magazine. So it looks like VanEck and SolidX have withdrawn their proposal from the SEC for the latest Bitcoin ETF. Their withdrawal comes about a month before the SEC's final deadline to approve or reject the ETF, and it looks like they want more time to work out the kinks before risking a rejection. Now, it was previously rejected and has historically been rejected since about 2013, but we'll continue. So this really isn't anything new. The when ETF meme for Bitcoin has been pretty prevalent since about 2013 when the Winklevoss twins made their first attempt at this. And it looks like SEC Chair Jay Clayton had some specific words on this topic, and he said, "There's work left to be done. Progress is being made, but people needed to answer those hard questions for us to be comfortable that this is the appropriate type of product." And that makes perfect sense. While I don't want to see Bitcoin regulated any more than it already is, I do understand why Jay Clayton would want a little bit more clarity with exactly how this ETF is going to work and what comforts he would need specifically in order to approve such an ETF. Now, on the free market, I would say let anybody launch an ETF, and those who could prove and display the best practices of having a strong ETF that does not allow for market manipulation and has proper custody solutions, the market would let this play out on its own. The ETFs that would launch and wouldn't do a good job of this, people would unfortunately lose a ton of money. People would then stop using those particular ETFs and move on to something that was working very well. And the market would obviously just self-regulate this, but that's probably not a very popular opinion, and a lot of people think that they need regulation in order to participate in such products. But as we can see, that isn't necessarily the case, as so many shitcoin exchanges have launched without any type of regulation or oversight, and people use them anyway. Why? Because people like trading and they like gambling and speculating and trading shitcoins, and an ETF would really be no different. So while I do think the free market would provide its own regulation, of course, nobody wants to go to prison and they want to do things by the book, which I can understand and appreciate. So it looks like we're going to need to wait. So it looks like the two specific concerns for Jay Clayton and the SEC would be, one, market manipulation, and two, custody. Now, these are, they're very valid concerns. We do know that whales can and do manipulate the price of Bitcoin, and that liquidity is still very low compared to your traditional markets. Bitcoin, as of today, in the middle of September, is, roughly a $200 billion market, which is just a drop in the bucket compared to the trillions of dollars in other markets, whether it be bonds, whether it be equities. It's still very, very small. And in terms of the crypto space or Bitcoin space, Bitcoin's obviously the largest, which is fantastic. It has the most open buy support. If you were to check coinmarketbook.cc, you can see that the buy support is very strong for Bitcoin compared to the other cryptocurrencies. So, that's a great thing to see. But in the grand scheme of things, it is still a very, very small market. But that has its upsides too, because that means that it's still super early, which is great for you and me. But I'll get back into that later on in this episode. And the other thing that worries them is custody. And we know custody is still an issue. Why? Because Bitcoin exchanges are still getting hacked on a somewhat frequent basis, and the best security practices are still being developed. There's things like the Glacier protocol, different kinds of multi-sig and cold storage solutions that other exchanges use to protect both their funds and customer funds. And this is important. And there's always new developments in this area, which is great to see because they are extremely necessary for Bitcoin to be taken more seriously from, let's say, the more traditional financial markets. For you and I, who are getting more comfortable using Bitcoin, storing Bitcoin, sending it from one address to another, and making sure that we don't lose it in the meantime, we're pretty comfortable with it. But custody is, for Bitcoin, and a digital asset, something that is a bearer instrument but not physical, is really wacky. For something digital to have physical characteristics is honestly pretty mind-blowing. Historically, anything that is digital can be copied, replicated, and has absolutely no scarcity whatsoever. And with Bitcoin, that is completely different. There is true digital scarcity, which is kind of hard to imagine, but it now exists thanks to Nakamoto consensus. Without getting too technical, we know that there will only ever be a little bit less than 21 million Bitcoins in total, which is really why everybody's here. You've created digital scarcity, and that has tremendous repercussions, and a lot of new financial infrastructure can be built on top of that. But from a custody standpoint, the SEC needs to know that the funds, the Bitcoin, is safe, it's secure, it cannot be hacked very easily, that people aren't going to lose funds, that investors that are gaining exposure to Bitcoin aren't going to, for lack of a better term, just get wrecked, which is very understandable. And on one hand, people can still get wrecked in traditional markets trading penny stocks or whatever, and nobody says anything about that. But with anything new, there's going to be additional and extra concerns for such a market, and I get it. But the good news is that both market manipulation and custody, in my opinion, will get fixed over time. Bitcoin's brand new. It's just over 10 years old, and it's already worth $10,000 a coin, which is mind-blowing. I'm still relatively new to the space, getting, I'd say it's over 2 years now. But it went from having a price of zero for the first 2 years to then going to $1, and now all the way up to $10,000. So it's still very, very early. And I think the liquidity will continue to grow over time, assuming that the price continues to increase. That's a big if, but you know how I feel about that. And as the liquidity grows and the overall market cap grows, that market manipulation will hopefully start to decrease. And I think it will decrease because as the price of Bitcoin increases, whales will inevitably start to take more profits off the table. And those coins will be redistributed to the next group of people. And then maybe someone like myself or yourself will take more profits, and your coins will be distributed to the next group of new users that comes into the Bitcoin space. And, more and more people will be maybe dollar cost averaging Bitcoin, or topping up their phone, or buying more on a consistent basis. And that volatility will start to decrease. And as the volatility decreases, I would suspect that the market manipulation would also start to decrease. And then you have the custody side. So more and more custody solutions are coming online. Every few months, it seems like. Backed Custody just launched very recently, within the last week or two, as they prepare for their physically settled futures contracts to launch just next week. And Fidelity also has the custody solution coming online. And these are very important pieces of Bitcoin infrastructure, and they are still being developed, and they are certainly necessary for these new financial instruments to be built on top of. You cannot have new financial products without the necessary plumbing or infrastructure to handle all of these things. We will not see the financial. Make sure you check out Trace Mayer and his 7 network effects of Bitcoin. But one of the things that he always talks about is the financialization of Bitcoin. And while I can't talk to it as well as Trace can, these things are necessary. The custody is necessary. The liquidity is necessary. We need to see the financial infrastructure be built. We need to see more and more exchanges. We need to see things like BISC, where we have decentralized exchanges. Bitcoin needs to grow globally, and we need more and more users to onboard themselves and get comfortable onboarding themselves onto the network. And I have no doubt that both of these things will continue to grow and improve in the years and decades to come. All right, so let's go over very briefly what are the arguments for a Bitcoin ETF. So, number one, it allows institutional players to get Bitcoin exposure. We want these old school whales to get themselves in. We haven't seen. There's a very large group of investors, whether it be financial institutions, family offices, even just high net worth individuals who could be putting even small percentages of their net worth into Bitcoin, maybe 1%, maybe even more if they're feeling really risky. And that's billions of dollars of new fiat coming into the ecosystem. But a lot of them don't even want to touch Bitcoin because they're not comfortable with it. It's brand new. I'm sure those same people had waited a very long time before they were comfortable putting a credit card on the internet to buy something. I mean, I know people who will only shop online if they go and buy a Visa gift card first, and they'll eat the $4 fee or whatever just to go and buy something online because they don't trust using their credit card on the internet. I know it sounds nuts, but on one hand, it's very inconvenient. But on the other hand, if you've ever had your identity stolen because you used a credit card online or in person, you get a little bit more sensitive to putting basically your private key on the computer. It's funny. Your private key is literally written down on your credit card, and anybody can look at it. Every time you type that number in on a web page, anytime you hand that card over to somebody else, you're giving up your private keys. It's kind of funny how that works. But so we'd need the ETF for these types of individuals to get into the market. Okay, the next group would be non-technical investors, and that would give them a chance to get more Bitcoin exposure. So I think of non-technical investors as maybe somebody, I'd say boomers, maybe like my parents, your parents, or maybe you're a boomer listening to this. I have no idea. But anyone who considers themselves non-technical or less tech savvy, who maybe has an E-Trade account or a Scottrade account, who doesn't mind dabbling into the markets. Maybe they invest in addition to their 401k or their retirement accounts. They get exposure otherwise. Now, these folks might not be interested in getting on Coinbase or downloading the Cash App or signing up for Kraken, Gemini, whatever. It's just too much for them. The submitting of KYC information, just the fact that they've heard Bitcoin exchanges have gotten hacked and they've seen it on CNBC or whatever, they're just really not interested in signing up for an exchange, buying Bitcoin, and either leaving it on the exchange or managing the keys themselves. I don't think they have any interest in doing that, which is unfortunate for them. Okay for us, but that's a lot of money that is sitting on the sidelines for the only reason is that they're uncomfortable buying it on their own. I remember even in 2017 for me, when I was trying to get my first sats, I needed my friend to sit with me while I signed up for the exchange and got it done. It was very uncomfortable. At the time, it took like 2 weeks to get verified. I mean, it was a nightmare. It was a complete nightmare. I hated every minute of it. It was very uncomfortable, and I think I take that for granted now. Now I like using the Cash App or whatever else, and it's very easy to use. I don't even think twice about it anymore. But in the beginning, it was not fun, and it gave me severe anxiety trying to buy Bitcoin. So it's totally understandable. One of the third arguments for the Bitcoin ETF would be, in my opinion, validation from the market. And that validation might convince some of the Bitcoin skeptics that you might know. Now, I'm not talking about Paul Krugman or Nouriel Roubini or something like that. I'm thinking maybe some of those non-technical investors who are interested, but they just don't trust it yet, or they don't believe in it. Now, there's a lot of non-technical people out there who haven't bought Bitcoin who don't see anything wrong with it. And I think they would invest if they thought it were easier. But there's also a group of these same individuals who need more validation. If they were logging onto their E-Trade account and they saw Bitcoin was something that they could buy, maybe that would give them a little bit more validation. Maybe some of their friends or family or people in their same age range would be getting exposure, and that would validate it for them. So I think those are some of the arguments for a Bitcoin ETF. Now, when talking about the arguments against a Bitcoin ETF, in my opinion, the first thing would be the ETF just isn't really necessary for Bitcoin to succeed. Could it bring a lot of money back into the system? Absolutely. There could be billions that would flow in just for the simple fact that the ETF exists. But in my opinion, it's just not necessary. We've already grown to $200 billion market without the ETF, and I don't think the ETF is necessary at all to grow another 200 billion or even get to $1 trillion market cap. It's just not necessary. You have physically settled futures that are online today with LedgerX, and you have Bakkt that is launching in just a week. Now, maybe Bakkt ends up being nothing really, and they don't have too much volume. But the simple fact is, it does exist, and will be a necessary instrument for speculators, miners, or anyone else to properly hedge themselves, especially Bitcoin businesses who receive payment in Bitcoin. They're going to need a way to protect themselves, just like any other market who has foreign exchange exposure risk or exposure from the commodity that they use in their business model to make money. They're going to need a hedging vehicle, and that is just fine. And these types of products already exist and can be used, and I can see them growing in the future. So I with that being said, I just don't see why the ETF is needed outside of that. It's just fine. And then the other argument against the Bitcoin ETF would be the potential for rehypothecation on Bitcoin. And to quickly, my attempt to explain rehypothecation is, let's say an exchange has 100 Bitcoin total that they could sell. Well, maybe they'll say they actually have 200 Bitcoin, and they sell an IOU for an additional 100 Bitcoin that they don't actually have. So that allows you to create paper claims to Bitcoin that you do not have. That's an issue. Caitlin Long talks about that a lot. That's her biggest concern with the financialization of Bitcoin, that there will be tremendous amounts of rehypothecation of Bitcoin. And I've even heard her say she was talking with traditional financial market players, and they said, straight up, the biggest problem with Bitcoin is that it's capped in supply, which, for you and I, that might be the best part about Bitcoin, but to them, there's not enough of it to go around to sell or to shill. And it's a serious issue. And I think it's potentially inevitable to have some level of rehypothecation. And I hope that Bitcoin's fixed supply and architectural structure keep that very, very limited, and things like proof of keys, proof of reserves will keep that in check, so that it and kind of let the free market just determine what an acceptable level of rehypothecation might be. I don't know if that's a controversial thought. I'm just thinking more in terms of free banking, and is 100% reserve even possible? Because if you have 100% reserve, then you can't lend at all. So there's always got to be some level of lending going on in order for production to even take place. But I think if you let the free market take care of that, if one particular exchange or financial instrument is rehypothecating beyond an acceptable amount and somehow goes insolvent, the market would realize that, okay, you can't rehypothecate over an additional 5 or 10%, because that could lead to insolvency in the event of a bank run or a proof of keys run, where everybody goes and claims their Bitcoin. There isn't enough Bitcoin to give to everyone who has an IOU on it, and then poof, you go insolvent. So that would be one of the biggest arguments, in my opinion, against the Bitcoin ETF. But the real question is, does any of this even matter? In my opinion, it doesn't. At this point, since 2013, it's been when ETF, when ETF, it gets delayed or denied or rejected pretty much every single time. That it feels like it's priced in. Nobody's really expecting the Bitcoin ETF to be approved, and I think I'll probably be super surprised when the ETF actually is approved. And I don't know what happens to the price after that, but it could be pretty wild, because I don't think anybody expects it to even happen anymore. And while I do think the ETF could potentially be great for the reasons I had mentioned earlier, selfishly it's really good for you and me, because the retail investor who takes the time to learn how to sign up for an exchange, use a hardware wallet, hold their own private keys, you can get in before everybody else. This is the first time in history where retail investors can get in before big money investors, institutional investors, private offices. This is your chance to front run them, for a lack of a better term. You can get in early, and it is still super early. So, keep that in mind. Be careful what you wish for. On one hand, you could say, well, ETF, then Moon. But on the other hand, it gives you plenty of time to pack your bags and accumulate and stack sats in the meantime, and stack responsibly, right? You get a couple of bucks worth here and there and not think too much about it. because you're one of the few people who's actually stacking sats. I mean, it's not that many people. We're talking about probably less than a 1% penetration rate for all internet users. And I know people throw out a higher figure than that. I don't see how it's higher than a few million people globally, honestly, that are buying on a consistent basis. I don't know that that's the case. Maybe I'm wrong, and if anybody has more data on that, please reach out to me. I'd love to read it. But I mean, this really just gives you a chance to continue to be early. The other thing I think is that Bitcoin is growing up a bit. It is much more resilient to negative news. This happened, they said they were pulling or withdrawing the SEC, withdrawing the ETF proposal for the SEC, and nothing even happened to the price. It was like it didn't even matter. Now, if this were 2017, any piece of negative news was like doomsday, red candles all over the place. I mean, huge double-digit pullbacks, like just absolute bloodbath. But now, an exchange can get hacked. You can have negative news. You can ban it in another country. And, Bitcoin doesn't care. Honey Badger doesn't care. It just keeps moving and keeps going. So I think, seeing negative news now is a good thing because we can be, or should I say, Bitcoin is being much more resilient in that sense and is not really reacting. Maybe it's because negative news is already priced in and everybody expects it. Maybe not, but for whatever reason, it seems like it's very much not affected by the negative news anymore. And I think that's a good thing. So, let me know what you think. Shoot me a DM. What do you think about the Bitcoin ETF? Do you think it's important? Do you think it matters? Are you surprised that they withdrew their proposal for an ETF? Let me know what you think. Leave us a review on Apple Podcasts. Follow us on Spotify. Leave us a comment on YouTube. We really appreciate it. And keep sending us those topic ideas that you want us to talk about. It really helps us build more content for you guys, and we really do appreciate all the followers out there. All right, peace.